Hello, Uncle Jim here. Today I want to share with you how I find good stocks and ETFs for selling options on. These are not just companies that are good for selling options and earning premium, but they're also good companies in general. I have a specific criteria that I like to use, and I also have some tools that work out quite well for me. I'm going to actually share with you some of these tools. I'm also going to share some really good companies that I'm looking at currently. So stay tuned. I think you're going to enjoy what I have for you. Okay, now let me jump into the important points of the video. These are the main criteria I like to use to identify good securities to um, either purchase or to sell options on. First of all, I like to find companies that have good revenue. It's kind of a given. I like to see revenue where they're growing and they have really good potential going forward. And then also, I like to see some good earnings. I don't typically invest in companies that don't make money. They typically need to be earning a good income and hopefully increasing that income down the road. At the end of the video, I'm going to actually share with you, when I share a couple of companies, I'm going to go into a little more detail on that. But that's just kind of the basics. I don't like investing in high flyers that don't make money. I will not look at those. I typically require all companies to be making money and to have some pretty good prospects going forward. Now, in this environment with this down market, it is difficult. Plus, the recession, companies are lowering their projections for future years. So you can only do as well as you can do. If you can't find any more details related to them and what they do share or have shared recently, you kind of have to go with that guideline, even though I find a lot of the companies have changed their outlooks or projections recently that it really has changed my opinion on some stocks. I still like them, but they're no longer the top of the list. So next, I also like to be sure that they have reasonable debt, meaning they're not don't have way too much debt or increasing debt every year. I kind of like to compare it to other companies that are similar, and the especially with this increasing rates, with the Fed increasing the rates, I like companies that are minimizing their amount of debt and actively paying off debt. And the same thing with equity. If they're doing buybacks and they're reducing their number of shares outstanding, that's also another good thing I like to look at. And then I'm a dividend investor. I started with dividend investing long before I ever sold options, so I like companies who pay dividends. Now, just I don't just look at yield. I like to see companies that are growing their dividends, especially if they've been growing them over a number of years. So it's more about the growing of the dividends versus just dividends in themselves or by themselves. The yield can be really high, but it doesn't necessarily mean it's a good company. Sometimes companies that pay too much dividends are putting themselves at risk. And then finally, I like to buy both ETFs and stocks that are optionable. Now, what do I mean by optionable? It just means that there's a good options market on those stocks. So there's good volume, and then there's also a good number of strikes to choose from and a good number of expirations. That way I can pick, how far I want to go out, and I have more opportunities. Especially if there's more strikes, you'll have more opportunities with different deltas. So it's very important for me. At first I didn't look at that, but now with selling, especially covered calls, I really like all my investments going forward to be optionable. Now, in this next part of the video, I'm actually going to share some tools that I use, and I'm going to share some of the tools are actually within Schwab, but I also do have a website that I like to use, and I'll be sharing that with you. There's more details down below related to that, and I'm also going to share my watch list. Now, I do have another video, and I'll share a link above that goes into a lot more detail about my watch lists and how I set them up. So if you want to take a look at that video, if you want to go into more depth, I'm just going to keep it kind of high level. And, so I encourage you to take a look. The watch list is really important. The watch list tied in with my planning worksheet, which I have mentioned in previous videos that I release early each week to my patrons in the different memberships. And I share within that, anything that's expiring or that needs to be managed in the near term. So with that being said, let's actually jump into the next part of the video, and I'll actually share with you a couple tools I use as well as some stocks I'm looking at right now. So stay tuned. This next part should be really interesting. Well, now I wanted to share with you a website that I really enjoy. This is a site I use. It's called Dogs of the Dow. It's literally dogsofthedow.com, and you can actually see a list of the dogs of the Dow, and you can search. You can search by market cap, dividend yield, the name, what the market's doing today. Like I can click on that and I can see, well, who's down, who's up. I can see also who's got the best dividend. Um, so you can really search around. And what I like to do with this to keep things really simple is if it's a down day, I like to see who's having a rough day, and especially if it's a company I want to own. And I'll just scroll through and I'll look for specific companies that I'm interested in, and I'll look at their dividends, and I'll see, Chevron, ExxonMobil here are both two good energy companies. T. Rowe Price. I've actually have some puts that I've sold on T. Rowe Price, Caterpillar. So it just gives you a lot of ideas. It's not difficult to use, and it's real straightforward. If you click on the specific link, it'll take you and give you more details about the company. And I kind of use this as a starting point. I see, well, who's down today? Who should I look at? Mainly because if it's a down day, then it's a good day for selling puts. If it's an up day, so if I reverse this and I own some of these names, say I own Dover, well, today would be a good day to sell some calls on Dover. So I primarily use it that way, and I end up using it quite a bit, probably almost every week. So this was the first tool. This is the one website that I wanted to share with you guys. Now let's actually jump into the Schwab tools and some of what they offer. Now with Schwab, you have quite a few tools to work with, and the easiest way to get to them is to go under research. My guess most other brokerages have something similar. The one I want to kind of focus on today is this stock screener. So if you click on it, it allows you to set up a bunch of criteria and kind of screen for certain kinds of stocks that you might want to look at. So here you've got, you could do it by price, index, exchange. Here you actually have optionable stocks. So that's one thing I had mentioned earlier in the video. I do want it to be optionable. You can also do it by dividends. You could say, well, I want, let's see, dividends. Let's see, it gives you different choices. So, I did analyst ratings. So you can also do analyst ratings. So you can do it by recent dividends. You can do annual dividend yield, the annual dividend rate. The one I like is the 5 year. You've got a 5 year dividend growth rate, and you've also got a 10 year dividend growth rate. And then as you start selecting these criteria, so I want it to be optionable. I want it to, let's say, 5 year dividend growth rate. Let's see, is there anything above 50? 21. And then say I want to do a 10 year, anything over 50 again, 3. Let's actually see if we can get a few more, 6. And there's quite a few different criteria you can use. You can use dividends, analyst ratings, company performance. You could say here, let's Schwab equity rating. We could say, well, only want it to be an A. Well, there's only 3 that are an A. So again, we're narrowing it down quite nicely. But you have all sorts of, you could do price, performance, valuation, financial strength, technicals. So quite a bit of different things you can do. And then when you're ready to look, you can actually view the 3 matches. So here it's giving me Cigna Corp, Pioneer Natural Resources, and Radian Group. So, and these are all A ratings. They all have good 5 and 10 year dividend growth. So it's a really nice tool, and I've used it quite often to find some companies that I really like. That's one. That's the primary tool that I like to use. The other thing I like is again the watch list. And here, this is my favorite stocks. I just set this up for this video, but you can have multiples. You can see I've got growth dividends. I've got favorite ETFs. Let's actually go to favorite ETFs. So these are some of my favorite ETFs that I like. And it allows you within the watch list to, you can sort by name, you can sort by price, 52-week range. You can also do what's called a basic view, and you can see dividend information, dividend yield. You can see when the next X dividend date is. You can do analyst ratings. Um, I don't know if these ETFs, yeah, a lot of ETFs don't have the ratings. Here you could see different information, last price. So it's a little bit less. And actually, let's go back to favorite stocks. So here you can see if we go over to basic view, go to analyst ratings, and these. So here you can see like Corning is one of my favorites. I own quite a bit of Corning, and I like to sell options on it a lot. Um, all of these companies, even though they don't have, like Morningstar isn't even ranking this last one, LYB. But these four companies I like. BP I really like too. But you can also look at valuation ratios. It's a great way to compare different companies, price performance. So there's a lot here. Um, let's actually jump into one of these. Let's look at BP. Now, actually, let's look at Corning, because Corning really is at a good price these days. So here they give you a lot of information within Schwab, and I believe most brokerages give you a fair amount. I don't know if they give you this much. Add a comment below. I'd be curious to who you use, and do they give you this kind of information. So, you've got ratings, you've got different information. Here you can actually see the chart and where they stand. You can switch to 5 years, so it's been in a pretty small range. It's part of the reason why I really like working with Corning and selling options on Corning. So it's at a pretty good price right now at $34. Here you can see the different trend analysis. What's the 90-day, the 200, the 50-day, and you can see again it's pretty close to right around all the trends. It's 34 now, so it's a little lower than most of the trends. And that's partially because of the market. Is it up today? Well, it looks like the Dow's up, but it looks like the Nasdaq is down, and all the other exchanges are down. So I believe this is the fifth day of down markets. Now, if we look at earnings, here it gives you a quick snapshot of what the earnings look like, and you can see they've got pretty good earnings. They beat their earnings recently, and then you can expand this and you can get more detail, and you can see here they've been increasing earnings, even going out to 23. They're gonna or actually that's 22. They are looking to have pretty good earnings, and then revenue still going up. Um, so overall, a really good company. We can also come down and we can look at dividends. So here you can see what they pay dividend wise. They're right around, what is that, 3.15. If we expand that, you can see they've been increasing. They've done a nice job increasing their dividend every year. Down here, we can actually see you've got basic information, ex-dividend date, announcement date, payment date, that kind of information. And then down a little lower, you've got what's the dividend coverage ratio. They've got plenty of cash to cover their dividends, so no worries about that. And then we can also see a 10-year growth rate for dividends of, what is that, over 15%. So that's why I really like Corning. And then you can also look at their financials, and their financials look really good too. They're down here at the bottom. So you can actually see current assets. You can see total debt. Their debt is, well, not bad. It went down a little bit from 2020. Actually, yeah, so it's down from 2019 and 2020. It looked like they increased debt some between 2018 and 19. And then equity is also down, so they're probably doing a fair number of buybacks with the stock being lower. So you can see a lot of information here, and so that's one of the reasons I really like Corning. You can also see if we come over here, The other point I like to make is it needs to be fairly optionable. So Corning's GLW, if we come over here to option change, and if we do GLW and then we view the option chain, what I'm looking for is to see if there's a good number. And there's an okay volume, not the greatest, but pretty good. And there's quite a few strikes. You can see the different strikes. And there's quite a bit of expiration days because this is September 9th, September 16th, 22nd, so quite a few expirations and different strikes. And so it's fairly optional, not the most optionable, but here you can actually see going out. Let's go out and look at 30 days. So let's look at, let's actually go out to October because I would probably look at an October expiration. Well, there's not many there. I think that's an oddball one. Let's look here. A fair number of volume and open interest. So you can see there's quite a bit of premium here too. So this would definitely be a very optionable stock that I would look at. Another one I like, which was also in the list, was BP. Let's look at BP real quick. And you can see with BP, it's also an A rating. Very good with Morningstar. It's not through the roof compared to some of the other oil companies or natural, not natural fuels, but gas and gasoline and those kind of things. It's also got good earnings. So you can see it's been beating its earnings. If we come out here and we expand earnings, their earnings are doing quite well. You can see huge increase over the last 2 years. Same thing with revenue. So overall, a really good company. We can go down and look at dividends. Now, I believe they did cut dividends, and now they're in the process of increasing them again. Yeah, so they did decrease dividends. They did a reverse stock split, I believe, and I also think that they changed. They had another part of their company that they had diversified, and they brought it back in. So they've made some changes, but they still, I think from here on out, they're going to be increasing dividends. But they're paying an okay dividend currently. I believe it's, what is it, almost a 4% dividend. That's earnings again. 4.67 annual dividend. And again, from the announcements I've heard, I think they're going to keep increasing them. We can look here to see what they've done with the regular. So the regular's they increased it some last year, and it looks like they'll probably increase it again. Between second and third quarter, they increased it. So my guess is they're going to increase it again. And then they'll go back to having some good growth. They also see about coverage. I don't think this is correct. They've got pretty good earnings, so I know their coverage is pretty good. So with this reverse stock split or this, remerging with one of the companies they diversified, I think it was called BPMP, and I think that's kind of screwed with some of the earnings a bit. Let's look at financially and total debt. They've been going down, so you can see they've actually reduced debt recently. And what about equity? Equity has come down. It was in the high 90s just a couple years ago. So again, good criteria. Let's jump over here and put BP in here. And let's see. Yeah, so they have really good option volume. You can see, wow, 13,000 contracts. And it's not that expensive, so it's a good company to work with. So it's something I'm looking at picking up. I was hoping to do it earlier this week, but because of some other deadlines that I've had to work with, I haven't been able to do much trading or actually be in the market much this week. So, but that's two of the companies from my watch list that I really like. Some of the others, Fast is another good company. Again, has good financials, has good growth. LYB, which is, I'm not sure how to pronounce that. I think it's Leon Bell Basil or something along those lines. Let's see what they say about them. I think they're a chemical company. Yeah, and they also have good numbers. Now they're down at a pretty good price considering their earnings, and we can look at their earnings real quick. So another good company, a little bit down, I guess, recently, but their revenues are up and their cash flow's been through the roof. So, and they too are very optionable. So that's it. Those are the tools that I use. Between the watch list, the different research you can do. Schwab has a lot of really good tools that you can use, and then when you pair it with the Dow, Dogs of the Dow website that I found, those are their primary things. The only other thing I did want to mention is I really like what is it, SPCHD? Yeah, Schwab U.S. Dividend Fund. They primarily invest in growth dividend companies, and you can see they have a really good review. Now, one thing I've also found myself doing is I'll look at their holdings. All their companies that they hold have good dividend growth, so it's another way to find some good companies to actually sell options on. So I found myself looking at this too and picking up some companies from here. So that's it. I hope you enjoyed this. As always, please hit that like button. Please subscribe. And if you have any comments, I try to answer all my comments. Add a comment below. And thanks for joining me. I hope you have a wonderful rest of your week. Bye.